Well, good morning. I want to bring you the latest data here in the Austin metro area. As we've said many times, our suburbs are booming. The real question is where. So we want to look here. This is Williamson County. This story just came out this past week. These are the fastest growing cities in Williamson County, which is the big county to the north of the Austin metro area. So look at Liberty Hill. This data is from 2020 to 2023. So 3 years of growth. Liberty Hill has grown 185%. Jarrell has grown 127%. Georgetown, which is not small, it's grown 42.8% in just 3 years. Elgin out to the east, up 27%. Here's some of the other towns. Cedar Park, relatively flat. Round Rock down here grew by 9%. Why did those, which are big cities, not grow as much? Well, Cedar Park is kind of landlocked. It's already filled in, so it really has nowhere to go. It's going to spill over into Leander and Liberty Hill. That's why you see the growth there. And Round Rock as well is pretty landlocked. It's got Georgetown to the north, Austin to the south, Cedar Park, Leander to the west. So really the only place Round Rock can grow is east. But anyways, massive growth. And again, look at Jarrell, 3,980 people. Is it going to keep growing? Take a look at this story. So this one, planned new town near Jarrell, moving at full speed ahead, 14,000 homes planned. All right, now remember, go back to this chart. Jarrell right now has 3,980. It doesn't even have 4,000 people, and they're going to add 14,000 more people. That would quintuple the size of Jarrell if this comes to fruition. So again, are there massive expansion opportunities in a lot of the ex-burbs, the secondary cities outside of the Austin metro? Absolutely. We're going to see more of that. Here's another story that ties in with that. So this is by Axios. This is the share of the labor force that works from home in 2023. Nationally, it's about 13.8%. But look at the two highest cities, Boulder, which is outside of Denver, and Austin, Texas. We're sitting almost at 25% of the workforce can work from home, which again goes back to all those suburbs outside of Austin. And we just looked at Williamson County, but trust me, it's growing in Bastrop County, Caldwell County, Hayes County to the south. So we're seeing growth in all directions. And a lot of that has to do from that ability to work from home or have hybrid work from home. All right, let's look at November data. So this just came in from Austin Title, and there's some good news in here. So again, we're in November. It's typically slow. In November, rates went up a little bit, but yet our average sales price in November was up 3.4% over November 2023. Now, interest rates were higher back in October and November of 2023 than they are now. And also the average days on market, that was up still. So we're still facing a little more inventory, but also the median sales price was up. So for the first time that I can remember in at least a few years, we're actually seeing this time over last year tick up a little bit. So I think that's good news. That may show us signs that as long as rates don't skyrocket back at the 7.5 or 8%, if they can stay in the high sixes even, or right around 7, be even with this time, I think we're seeing the market start to flatline or at least bottom out. If we look at the week of December 1st through the 7th, listings were up a lot. Now, again, this is only 1 week, but we're seeing some sellers maybe waiting for the end of that election or waiting for some signs that the rates were finally going to come down. But we're seeing some sellers uptick there. Sold listings were down, so still not seeing a lot of buyer activity. Months of inventory a little higher than last year, about 4.3%. Median sales price about 432. I think we bottomed this year around 425. So again, we're seeing a little improvement in the median home price and average home price. This is year over year data. So this is looking at the entire year of 2023 through November and the entire year of 2024 through November. So again, average sales price within about 1%. Total sales pretty even. Days on market up about a week, and that has to do with more inventory. And then median sales price down about 2.9. But again, that's if you take all 11 months blended together. But the last month, November, we saw some improvement. And then again, here's listing history. We're at the highest number of listings we've had at least since 2010, but I think it goes back more like 20 years. A lot of listings on the market and pendings at a low point as well for the past 13 years. Let's talk about mortgage rates. So if you're paying attention to this, again, the Fed this week is going to make an announcement that they may lower their rate one more time. Most likely, I think the prediction is a quarter of a basis point, but the Fed is not influencing mortgage rates. The bond market is influencing mortgage rates. The bond market still believes we have higher than normal inflation. They believe that if the economy continues to stay hotter than anticipated, or if the new presidency puts in any policies that would continue to keep inflation higher, they want to keep their return higher. So right now it's keeping mortgage rates kind of in this 6.75 to 7 kind of range right now. So pay attention to that. We're at 6.95. It got down to about 6.68, I think, last week at some point, and then bounced back up. So pay attention to mortgage rates there. Finally, this is, again, seasonal data. This is number of active versus sold listings. The green is active listings right now. We're still in mid-December. This will probably go down by the time we get to the end of the month. But you can see this is summer. This is when we peak out, early summer. And then we typically see it start to drop off. But it's not dropping off this way as much as it rose in the spring. So we're going to start next year, most likely with more inventory than we started this year. So until more buyer demand comes into the market to start chewing that inventory up, I think we're just kind of stair-stepping our way up in inventory. But I think next year there are some predictions that it could pick up pace a little bit, especially if rates don't go over 7%. If they can stay in the sixes, I think we'll see a stronger market in Austin than we have the past 2 years. Anyways, hope this data was helpful. If you're looking to invest or buy or sell anytime in 2025, we'd love the opportunity to chat with you. And of course, make sure to click our subscribe button. You can check out our YouTube channel at Ryan Kelly Group if you want to follow these videos each and every week. All right, I think you have just 1 week left until Christmas. So get out there, do your holiday shopping, and we'll talk to you next week. Thanks.